Canada's economy is poised for a strong performance in 2025. The nation has been preparing for this moment, building on years of strategic planning and investment in key sectors. From technology to natural resources, Canada has diversified its economic portfolio to ensure stability and growth. Despite global uncertainties, Canada has consistently demonstrated resilience and adaptability. The country's ability to navigate through economic downturns and global crises has been remarkable. This resilience is largely due to its robust policy frameworks and the proactive measures taken by both the government and private sector. The country's strong fundamentals, including a sound financial system and a diversified economy, provide a solid foundation for growth. Canada's banking system is one of the most stable in the world, and its regulatory environment is conducive to business and innovation. This stability attracts foreign investment, further bolstering the economy. As we look ahead, several factors suggest that Canada is on track for an economic boom. Lower interest rates, increased consumer spending, and a robust labor market are expected to be the primary drivers of this growth. Consumer confidence is high, and spending in retail and services sectors is on the rise, indicating a healthy economic environment. The labor market in Canada is particularly strong, with low unemployment rates and a high demand for skilled workers. This demand is being met by a well-educated and diverse workforce, which is a key asset for the country's economic future. Additionally, the manufacturing sector is seeing a resurgence, contributing to job creation and economic stability. However, it is crucial to acknowledge the potential challenges that lie ahead. High household debt, trade policy uncertainties, and reduced immigration targets could pose headwinds to the booming economy. Household debt levels are a concern, as they could impact consumer spending and financial stability. Trade policy uncertainties, particularly with major trading partners, could also affect economic growth. The real estate market, while strong, faces potential risks from regulatory changes and market corrections. Reduced immigration targets could impact the labor market and economic diversity, which are crucial for sustained growth. This essay will delve into both the promising opportunities and potential obstacles for Canada's economy in 2025, providing a balanced perspective on what lies ahead. By examining these factors in detail, we can better understand the dynamics at play and the strategies needed to navigate the future successfully. Canada's economic resilience is a testament to its strong foundations and forward-thinking approach, positioning it well for the challenges and opportunities of the coming years. Interest rates are expected to remain low throughout 2025, a trend that has been observed over the past few years. This sustained period of low rates is a strategic move by the Bank of Canada to foster economic stability and growth. This is welcome news for businesses and consumers alike. For businesses, it means more affordable financing options, enabling them to invest in new projects, hire additional staff, and expand their operations without the burden of high interest costs. Lower interest rates make it cheaper for businesses to borrow money for investment and expansion. This can lead to the development of new products, the opening of new branches, and the ability to compete more effectively in the market. This, in turn, stimulates economic activity and creates jobs. More jobs mean more income for families, which translates to higher spending power and a more robust economy. For consumers, lower interest rates mean lower borrowing costs on mortgages, car loans, and other forms of credit. This makes it easier for families to purchase homes, buy cars, and finance other significant expenditures. This frees up disposable income, which can then be used for consumption, further boosting the economy. When consumers have more money to spend, businesses see increased sales, leading to a positive cycle of economic growth. The Bank of Canada has signaled its commitment to maintaining low interest rates to support economic growth. This policy is part of a broader strategy to ensure that the economy remains resilient in the face of global uncertainties. This accommodative monetary policy is expected to provide a significant tailwind for Canada's economy in the coming year. By keeping borrowing costs low, the Bank of Canada aims to encourage investment and spending, which are crucial for sustained economic growth and prosperity. Consumer spending is a crucial driver of economic growth. When consumers feel confident about the economy, they tend to spend more, which in turn increases demand for goods and services. In 2025, several factors point towards increased consumer spending in Canada. Low interest rates, as discussed earlier, will leave consumers with more disposable income. Additionally, a strong labor market, characterized by low unemployment and rising wages, will further boost consumer confidence and encourage spending. As Canadians feel more financially secure, they are more likely to open their wallets, driving economic growth. Canada's labor market is currently experiencing a period of robust growth. Unemployment rates are at historic lows, and job creation remains strong. This is partly due to a thriving technology sector, which is creating high-paying jobs and attracting skilled workers from around the world. The strong labor market is a positive sign for the Canadian economy. It indicates that businesses are confident about the future and are willing to hire new employees. A tight labor market also puts upward pressure on wages, which is good news for workers and further contributes to increased consumer spending. Section 5. The debt dilemma. Navigating high household debt. Despite the positive economic indicators, Canada faces some challenges. One significant concern is the high level of household debt. Years of low interest rates have encouraged Canadians to take on more debt, particularly mortgages. While low interest rates make debt more manageable in the short term, a sudden rise in interest rates could put a strain on household finances. This could lead to a decline in consumer spending and potentially slow down economic growth. Addressing the issue of high household debt is crucial for ensuring the long-term health of the Canadian economy. Section 6. Trade policy uncertainties, a cloud on the horizon. Global trade tensions and protectionist policies pose another challenge for Canada's economy. As a small, open economy, Canada relies heavily on international trade. Uncertainty surrounding trade agreements and potential trade disputes can create volatility and negatively impact Canadian businesses that depend on exports. The ongoing trade negotiations and potential for protectionist measures from major trading partners like the United States create a level of uncertainty for Canadian businesses. Navigating these choppy waters and ensuring continued access to global markets will be essential for maintaining Canada's economic momentum. Section 7. Immigration, a balancing act for growth. Immigration has long been a key driver of economic growth in Canada. Newcomers bring skills, talent, and entrepreneurial spirit to the country. However, recent reductions in immigration targets could pose a challenge to Canada's long-term economic prosperity. A shrinking pool of skilled workers could lead to labor shortages in certain sectors, potentially hindering economic growth. Finding the right balance between managing immigration levels and attracting the talent needed to support a growing economy will be crucial for Canada's future success. Section 8. Conclusion, a positive outlook with challenges. In conclusion, Canada's economy is well positioned for a boom in 2025. Low interest rates, increased consumer spending, and a strong labor market are expected to drive this growth. The economic landscape is set to benefit from a combination of favorable conditions that have been building up over the past few years. The strong labor market, characterized by low unemployment rates and a high demand for skilled workers, is a key factor in this anticipated growth. Job fairs and bustling offices are becoming more common, reflecting the positive employment trends. Companies are actively seeking talent, and this is expected to boost productivity and innovation across various sectors. However, challenges such as high household debt, trade policy uncertainties, and reduced immigration targets cannot be ignored. High household debt remains a significant concern, as it could limit consumer spending and affect overall economic stability. Trade policy uncertainties, especially in the context of global trade tensions, pose risks to Canada's export-driven sectors. Reduced immigration targets also present a challenge, as immigration has historically been a key driver of economic growth in Canada. The reduction in immigration could lead to a shortage of skilled workers, impacting industries that rely heavily on immigrant labor. Protests and debates around immigration policies highlight the complexities of this issue. Addressing these challenges will be crucial for ensuring the sustainability of Canada's economic growth. Policymakers need to engage in thoughtful discussions and strategic planning to mitigate these risks. Government meetings and business strategy sessions will play a vital role in shaping policies that support economic resilience. By implementing prudent policies and fostering a business-friendly environment, Canada can navigate these challenges and capitalize on the opportunities that lie ahead. Collaboration between business leaders and government officials is essential to create a conducive environment for growth. Business conferences and partnerships will be instrumental in driving innovation and investment. Despite the potential headwinds, the overall outlook for Canada's economy in 2025 remains positive. The Canadian flag waving proudly symbolizes the nation's resilience and optimism. Positive economic graphs and celebrations in city settings reflect the collective hope and confidence in a prosperous future. With the right strategies and a united effort, Canada is poised to achieve significant economic milestones in the coming years.